Good afternoon and welcome to the Sustainable Materials Management webinar series, a joint effort between the National Recycling Coalition and the Pennsylvania Recycling Market Center. My name is Wayne Bowen and I'm the Program Manager for the Recycling Market Center, and I will serve as your moderator today. We would like to extend a special thank you to Bob Hollis of the Mobius Network for providing the webinar management software for this series, and Lisa Ruggiero of the National Recycling Coalition for providing technical support. Today's webinar topic deals with recycled commodity pricing, and we have two excellent presenters, Joe Picard with ISRI and Greg Rutter with Pulp and Paper Week. Should you have any questions throughout the presentation, please submit them using the GoToWebinar dialog box. We will conduct a question and answer session when both presentations have been completed. Please note that this webinar is being recorded and will be made available for reviewing on the NRC and RMC websites. It is my pleasure today to introduce our first presenter, Joe Picard from the Institute of Scrap Recycling Industries. Joe serves as the Chief Economist and Director of Commodities at ISRI, where he conducts research and analysis on commodity and scrap market developments and the key economic role that recycling plays both in the U.S. and abroad. Joe provides information and insight to the primary and recycled iron and steel, non-ferrous metal, paper, and plastics markets to more than 1,600 ISRI member companies, as well as to industry associations, policymakers, the press, and the general public. He is also a regular contributor to Scrap Magazine. Prior to his position with ISRI, Joe served as the economist for the International Copper Study Group in Lisbon, Portugal, and as a research analyst at Sladen and Associates, a consulting firm in Alexandria, Virginia. He holds a master's degree in economics from Virginia Tech and a bachelor's degree in political science from Loyola College. Joe, thank you for joining us today, and you are on.
Just want to say thanks to you, Wayne, and thanks also to the National Recycling Coalition and to the Recycling Market Center for putting the webinar together today. I'm certainly pleased to be here with you and to share some of our thoughts about what are the forces, both global and domestically, that are shaping the metals industries today, and specifically the ferrous and non-ferrous scrap metal markets. I've got a number of charts to go through here. I'm happy to share my presentation with people who have signed on today, and certainly happy to take any questions that you might have today or afterwards. And I think my contact info is actually the last slide as part of this presentation. But just to start off, I want to give those of you who may not be familiar with ISRI just a little background information about our organization before we get started. So ISRI represents more than 1,700 member companies that process, broker, consume the whole range basically of recycled commodities, from metals to paper, plastic, glass, textiles, tire and rubber, and electronics too. We're headquartered in Washington, D.C., and I think we've got about 40 staff members currently. ISRI provides education, advocacy, and compliance training, and promotes public awareness of the vital role recycling plays in the U.S. economy, global trade, and the environment. And that's basically where I come in as Chief Economist and Director of Commodities, which is admittedly kind of a mouthful of a title. But it's pretty straightforward proposition, actually. What we try to do here is provide our members with up-to-date commodity market information through regular publications like our Monday and Friday reports, which give a look at sort of what to expect with the week ahead, and then a wrap-up on Friday of sort of the major economic, commodity, and scrap market developments for the week. That's a member service, but we're happy to add people who are non-members to the list. So if you're interested in receiving those reports, feel free to send me an email. We also have commodity-focused programs, such as the ISRI Commodities Roundtables we held last week in Chicago. Our ISRI National Convention has a number of commodity-specific spotlights. This year's convention drew more than 6,000 participants, and we do other events such as webinars, et cetera. And then the second part of it is basically to inform external audiences about the economic and environmental benefits associated with recycling. So ISRI had a study commissioned last year by Dunham and Associates, a consulting firm in New York, to try to get a better sense of really how big an impact the industry has on the economy and how many jobs we provide. That study showed that the scrap industry directly employs around 138,000 people, and if you include the jobs that are indirectly supported by our industry, that number climbs to about 450,000 jobs as of last year. Based on data provided by the U.S. Geological Survey, by industry associations and some other sources, the scrap industry processed over 130 million metric tons of material last year that are valued at around $100 billion. Of those 130 million metric tons or more, we shipped more than 50 million metric tons overseas to nearly 160 countries. ISRI represents a whole range of businesses from large multinationals to small sort of mom and pop organizations that have been in business for generations. So from the early days of the scrap industry, when we had a lot of sort of peddlers going door to door picking up household goods and other items, our industry has certainly evolved dramatically over the decades. Here you see on the screen some of the key features of the evolution of this industry. It's certainly been increasingly capital intensive. If you look at the metal side of it, from less than 200 shredders a couple decades ago today, we've got over, I think, 340 shredders in operation in North America. There's been a considerable industry integration and consolidation. We've seen vertical integration where some of the steel mills have acquired scrap recycling companies in part in order to secure supply. We've certainly seen an expanding range of commercially recyclable commodities, everything from plastics to electronics to other new products that are entering into the stream. It's becoming an increasingly competitive marketplace, not just because of the shredders, but because of the nature of the business. It's increasing competition for metal units today. And as we'll see in this presentation, it's certainly becoming an increasingly globalized marketplace. So I'll start off talking about the ferrous side of things, and then we'll talk about non-ferrous, and then have some forward-looking thoughts, and then happy to take your questions. Just looking at ferrous, we'll do a quick industry overview, look at some of the main market drivers, supply and demand, the relationship between steel and scrap prices, the relationship between scrap pricing and manufacturing, domestic versus overseas demand, and then the global marketplace. Next slide, please. So, quick overview about the ferrous scrap industry. In the U.S. last year, we processed about 74 million metric tons of ferrous scrap. The value of that ferrous scrap purchased both here and exported overseas, we estimate at a little over $35 billion. Obsolete ferrous scrap is recovered from old end-of-life products like automobiles, steel structures, household appliances, railroad tracks, etc., whereas prompt scrap is generated from industrial and manufacturing sources. USGS estimates that for the ferrous scrap, 58% of it came from obsolete, 20% from prompt, and 22% from home scrap last year. That home scrap is both produced and consumed typically at the same mill, so it doesn't really touch our industry, so we don't tend to include that in our scrap industry statistics. So both obsolete and prompt scrap are processed by the recycling industry in the commodity grade material. Typically that accounts for about 60% of the total raw steel produced in the U.S. Additionally, we export ferrous scrap to 90 countries worldwide. According to data from the UN, the U.S. is the largest exporter of ferrous scrap in the world, accounting for over 20% of global ferrous scrap shipments in 2010. So I wanted to take a look at some of the main drivers on the ferrous scrap, and certainly pricing is a big one. Prices provide the incentive to bring material to the market. We see here how the relationship between the average annual price here, the number one heavy melting steel, and the total amount of purchased U.S. ferrous scrap has evolved from 2007 through 2011. Certainly scrap also competes against iron ore, direct reduced iron, and other metal inputs. And the price of scrap and those scrap substitutes do tend to move together. But certainly higher scrap prices provide the incentive to increase supply. And the U.S. is the major supplier of ferrous scrap. to the world today. And one of the reasons we are such a large supplier is because of basically the supply that we have in place today, which is thanks in part to our significant manufacturing base and developed economy. So we've got a large inventory of ferrous scrap in place, in addition to the prompt scrap that's continually being generated by manufacturing. Here you see on the screen are the results from a study that ISRI commissioned to get a better sense of the obsolete scrap inventory. That study showed that at the end of 2009, ferrous scrap inventory, which is scrap that is available at prevailing sort of economic and market conditions, that inventory stood at nearly 1.2 billion tons at the end of 2009. So as a result, the U.S. supply of ferrous scrap is more than adequate to meet both growing demand for scrap at home and overseas, which is what we saw last year, where domestic consumption of scrap went up, exports of scrap went up, but we saw relatively stable pricing levels, albeit certainly at an elevated level. So here we see just the recent trend in domestic demand and production. USGS data show that domestic ferrous scrap consumption increased to 56 million metric tons last year, and total apparent steel consumption rose to 91 million metric tons. Of that 56 million of domestically consumed ferrous scrap, the data showed that the majority of it was consumed at electric arc furnaces, accounting for 44.5 million tons, followed by basic oxygen process steelworks at nearly 9 million tons, and blast furnaces at 2.3 million tons. And as indicated, the competition for scrap is certainly going up. Now, historically, there's been a clear correlation between steel prices and ferrous scrap prices. Here we see the relationship between number one, bush lengths, the line in red, as reported by Scrap Price Bulletin, and hot rolled coil prices, the line in blue, as reported by Steel Business Briefing. Over the course of this past summer, we saw heightened price volatility, which has been variously attributed to the glut of iron ore production worldwide by steel mills and some scrapyards keeping sort of leaner inventory levels in the aftermath of the recession. Certainly overproduction at Chinese steel mills has a global impact. And perhaps some of the inefficiencies in the market that saw prices for prime grades actually trading at a discount to obsolete grades over the summer. Of note, steel is usually quoted in dollars per short ton, 2,000 pounds. Ferrous scrap typically quoted in dollars per gross ton. So this is somewhat intuitive, I think. This is the relationship between U.S. manufacturing and the ISRI scrap index. That index is a composite of prices from both ferrous scrap, non-ferrous scrap, and recovered papers prices as well. As manufacturing goes up, those manufacturers tend to consume more scrap. As that demand for scrap goes up, it's putting upward pressure on scrap prices. And I think coming out of the recession, we saw manufacturing in general and sort of certainly automobile production sort of leading the way out of the recession. But lately, we've seen some mixed reports on U.S. manufacturing. Last week, the Federal Reserve reported that industrial production contracted 1.2% in August. The manufacturing component of that IP number was down 0.7%. We've seen PMI numbers signaling contraction in the last couple of months, and some regional manufacturing reports that are showing signs of weakness too. So we've actually seen a little bit of discrepancy between the two series, but that's certainly happened in the past. Over the longer term, we would expect a return to the norm. I'll talk in just a minute about how the marketplace for ferrous scrap is becoming more global, but I wanted to touch base on one important thing to remember, and that's the primary consumer for ferrous scrap for the U.S. scrap processing industry is still domestic. Now, certainly, we're shipping more and more overseas, and I think the containerization ferrous scrap has allowed us, even some of the inland scrap yards, to ship overseas. But of the ferrous scrap that gets processed here 70% of it still gets consumed at home, whereas the balance, about 30% of it, gets shipped overseas. But having said that, overseas demand is certainly becoming increasingly important. Last year, we exported 22.7 million tons of ferrous scrap. That's not including stainless and some of the specialty alloys. That's a 21% increase year on year. By value, the increase was even more dramatic, jumping 40% to $10.4 billion. By grade, shredded shipments are one of the most important categories. They were up 13%. Heavy melting steel, number one, HMS, was up 43% by volume to over 8 million tons. Last year, Turkey was again the largest overseas buyer. I think most people, when they think of the biggest overseas consumers of scrap, they think of China. For most commodities, that's true. On the ferrous scrap, it tends to be Turkey, followed by China, Taiwan, South Korea, and India. Here you see a nice chart that's provided by the Bureau of International Recycling, which shows those overseas shipments. These include the stainless and alloys by major destination. And again, I'm happy to share this presentation with others who might like a copy. But the overall globalization of the market, I think, really shows up in this next slide. And this shows not just the U.S., but the total volume of ferrous scrap exports from all countries from 1990 to 2011, with data provided by the UN Comtrade database. So in 1990, the total volume of all ferrous scrap exports from all countries was a little over 9 million metric tons. Just over 2 decades later, that increased by more than tenfold. In 2011, we saw global exports of nearly 98 million metric tons. So that's from 9 million in 1990 to 98 million last year. Pretty dramatic. And a presentation about steel and ferrous scrap wouldn't be complete without a look at China. And figures show that of the more than 680 million tons of steel produced in China last year, which is a staggering figure to begin with, only about 90 million tons, or 13%, was supplied by scrap, as compared to Western producers, where that figure is typically around 55 to 60% scrap as a percentage of steel output. If you look at scrap imports in China as a percentage of total steel output, that's even smaller, coming in at 6.8 million tons, or just 1% of steel output. So I think there still exists tremendous potential for expanded Chinese ferrous scrap consumption. While domestic scrap generation already supplies the majority of ferrous scrap consumed in China, import demand is based not only on available supply, but also on pricing and regional trade. For example, if you look at the U.S., which is by far the largest exporter of ferrous scrap, we still imported over 3 million tons of ferrous scrap last year. Okay, so those are the ferrous highlights. Now we'll take a look at the non-ferrous market drivers. Okay, so just a quick overview of the non-ferrous scrap markets. Non-ferrous metals, including aluminum, copper, lead, nickel, tin, and zinc, are among the few materials that don't degrade over time. So the capacity for them to be recycled is basically infinite. While in terms of volume, non-ferrous scrap makes up about a quarter of the total quantity of material recycled in the U.S. By value, non-ferrous scrap, including precious metals, accounted for nearly 70% of total U.S. scrap recycling in terms of earnings last year. That in part is a reflection of the ramp up in precious prices last year. In 2011, more than 9 million metric tons of non-ferrous scrap was processed in the U.S. From a wide array of sources. Non-ferrous scrap is then consumed by secondary smelters, refiners, ingot makers, foundries, and other industrial consumers in the U.S. and more than 100 countries worldwide. So here are some of the recent highlights in terms of non-ferrous markets here in the U.S. I won't go through each one of these numbers, but just point out some general trends. On the aluminum and copper markets, certainly we see falling domestic scrap consumption in recent years. That was, of course, impacted by the recession, but We still haven't gotten back to pre-recession levels. On the other hand, scrap exports are on the rise. You see on the aluminum market, that table on the top left in purple, scrap exports jumped from 1.5 million tons in 2007 to over 2 million tons in 2011. A similar story on the copper market, decreasing domestic consumption and increasing exports. On the lead side, we're actually seeing a drop-off in overseas demand for lead metal scrap. Stainless steel scrap exports have actually taken a hit as well lately. And then just to give you a look at some of the U.S. copper market drivers, figures from USGS showed that total consumption of copper scrap last year was around 780,000 tons. Of that, 130,000 tons was old scrap, 650,000 tons of new scrap. That compares to the mid-1990s when annual consumption was well over 1 million tons, 1.3 million tons typically in the mid-90s. This also shows the breakdown of where this copper scrap is being consumed domestically. Brass and wire rod mills, the vast majority, followed by ingot makers, foundries, and refineries. So as compared to years past when copper prices could move typically only a couple of cents over the course of a whole year, copper prices today can easily move 10 to 15 cents per pound on any given day. Copper scrap is often priced as a discount to the most actively traded COMEX copper's future contract. And here you see prices do tend to move in tandem, although the spreads between refined copper and copper alloy scrap certainly do move over time. And for very brief periods, high-quality copper scrap has traded at a premium to refined copper, but that's not the norm. As copper scrap movements are dominated by conditions really in the refined market, scrap dealers have minimal control over where prices go. And so they're widely considered to be price takers, especially on the sell side. So this is the global refined copper market fundamentals. There's a lot going on in this slide, but basically figures from the International Copper Study Group show that global refined copper usage has increased from around 15 million tons worldwide 10 years ago to about 20 million metric tons today. China is obviously a big part of that increase, and today accounts for about 40% of world refined copper usage. In this chart, the red line is showing copper prices, and the shaded areas below are the inventories, including stocks at the exchanges of producers and consumers. And typically they move in opposite directions. Certainly as inventories shrink, in other words, as demand outstrips supply, prices tend to go up. It's been less pronounced, that relationship, in recent months. One potential reason is that ICSG data don't count unreported Chinese stock movements, which can be significant and have been the series of a number of press articles this year. But certainly China is a huge player. So this chart demonstrates just how big a role China plays in terms of overseas demand for U.S. copper and copper alloy scrap. From 2000 to 2011, the total value of U.S. copper scrap exports jumped from $500 million to nearly $5 billion. That's from 2000 to 2011. As a portion of that, copper scrap exports to China jumped from $165 million to nearly $3.5 billion last year, and this is according to Census Bureau data. And we see a similar story on the aluminum scrap exports. We've seen a simultaneous surge in overall aluminum scrap exports. This includes used beverage containers, remelt scrap ingot, and other aluminum scrap. Simultaneous overall increase, and from China as well. 2011, we shipped about 576,000 metric tons. Of that, China accounted for 23% of overseas demand. Last year, that figure increased to 2.14 million tons overall, and China accounted for 67% of overseas demand for U.S. aluminum scrap. So China is certainly a big determinant in terms of overseas demand for scrap, for non-ferrous especially. And Chinese buyers certainly are sensitive to movements in refined copper prices. So copper scrap and refined copper are substitutes for one another, both at the smelter and refinery level, but also at the semis manufacturers. So this chart shows that as refined copper prices go up, so goes Chinese demand for scrap, because when refined copper prices become elevated, copper scrap becomes that much more attractive as a substitute for refined. So those are, sort of the big fundamentals, I think, for those two markets. Moving on to sort of the non-fundamentals, if we can look at the next slide, please. Certainly, the role of investment funds and speculators is a subject of much dispute in terms of how big of an impact the funds have on moving prices around. I think if you ask most economists, and certainly almost all exchange representatives, they'll tell you that the studies that have been done show that there's really no quantifiable relationship between speculative interest and sustained higher commodity prices. I think most consumers that I talk to of scrap and of non-ferrous metals say that market fundamentals used to be the most important determinant of prices, and today they're amongst the least important. And I think if you ask people who are trading the metal today, they don't really care too much about delving too deeply into the underlying analysis. They say the price is the price is the price, and that's what you're going to have to deal with. The LME is for those of you who don't know, it's the largest exchange for the base metals. Copper is also traded in the U.S. At the COMEX. And just of note, back onto the ferrous, the CME group launched a ferrous scrap contract last Monday. It's a little too soon to tell whether that will catch on. But looking forward, to wrap up, some of the sort of macro trends we're looking at on the metals and scrap in general, that as virgin material prices increase, scrap becomes increasingly attractive. As societal concerns about sustainable supply become more pronounced, a greater emphasis is placed on the benefits of recycling. As expanding developing economies and ongoing urban migration prompts higher infrastructure investment, scrap becomes essential to meeting the growing global demand for raw materials. And as the market for scrap has become increasingly global, scrap commodities are traded worldwide and become less dependent on local supplies and markets every day. Of course, all this is in the context of continued uncertainty on the global front. Most people that I talk to continue to expect considerable market volatility. Markets are skittish, obviously, due to global economic challenges, including the sovereign debt crisis in Europe, slower growth in China, and sort of sluggish growth in the U.S. Coming out of the recession, which is the result basically of the dual impact of the pop in the housing market and the financial market crisis as well. I think we've seen progress on most of these fronts. Obviously, the ECB has launched a new bond buying program. The Chinese have announced a new stimulus package for infrastructure. And last week, the Federal Reserve announced the third round of quantitative easing. And so I wouldn't say that we're out of the woods yet, but I think there is ground for cautious optimism. With my role here at ISRI, I can't forecast where prices are going, but just a couple of key trend drivers that we're looking at, certainly the increasingly and rapidly changing global marketplace. Scrap is becoming more attractive as primary prices increase. There's going to be disparities between regional economic and manufacturing growth, and here on the chart on the right you see IMF forecasts by different regions. Obviously, the advanced economies are not as expected to grow as quickly on average over the next couple of years as the developing economies, but we're certainly still in a low interest rate scenario. Haven't touched on really on energy and transportation costs, but those are certainly playing a big role in terms of production and trade. We do expect shifting consumption patterns, with China certainly promoting a shift in focus to domestic demand growth versus purely export growth. But I think overall, based on the U.S. Large supply in place and the growing overseas demand, we expect to see a large U.S. presence and potential growth for U.S. Metal scrap markets. So that's my presentation. I'm happy to take any questions.
Greg is the lead editor for PPI Pulp and Paper Week. Greg has covered the U.S. and export recovered paper for 15 years, containerboard for 7 years, and newsprint for 3 years. Greg is a Pepperdine graduate and was a daily newspaper reporter for 12 years before joining PPI Pulp and Paper Week. He has interviewed 20 CEOs and visited 35 mills and plants globally. Okay, Greg, you're on.
Good. Yeah, no, thank you, Wayne. Let me just start off with a little bit about the company I work for. I work for RMC. Oh, great. There we go. Thanks, Wayne. I work for RMC, based in Bedford, Massachusetts. Pulp and Paper Week is a publication, one of various publications that RMC owns. Our focus is on pricing pulp, paper, recovered paper, and board products in the United States. We also have fellow publications in Europe, Latin America, and Asia. And quite frankly, RMC really provides a supply chain, if you will, of information products for the forest products and pulp and paper industry. We've got conferences, we have economists who do monthly reports, we have the news and pricing, as I mentioned, and we also have a mill benchmarking system that looks at mills, pulp and paper mills around the world in terms of their costs. I'm going to mix in a little bit of a whole bunch of stuff here, not only politics, but most importantly, the price plummet that's gone on now for 6 months in the United States for recovered paper. Prices on OCC are down, at least based on our publication for September, to a national average of around $80, $85. Those prices are basically half of what they were a year ago. So there's been quite a plummet in pricing in the last 6 months. And the plummet was caused by several issues, primarily the decline in export demand from China. And why did the export demand from China drop off a bit, especially in a country that is continuing to grow paper and board capacity? Well, it dropped because for the second year in a row, the packaging demand situation in China has been less than strong. And so as the mills there have taken some downtime and have not run as hard, it has meant that their decline for OCC on the board side has dropped. That was felt, of course, in the export market in terms of demand and affected pricing. Now, with that in mind, also in the United States at the same time, we've seen paper and board overall on a year-to-date basis that is down slightly versus where it was a year ago. So bottom line is that more recovered paper is not in demand either in the United States as of this point this year or in China, where the drop-off has occurred as well. So, there was the price fall in second half of 2011, then prices went up early in the year, and then over the last 6 months, they've declined. And the prices as they sit as of this month are basically the lowest in about 3 years, and half of what they were, as I mentioned before, a year ago. Big issue as it relates to where the pricing is today and where it might go is the possibility of an East Coast port strike. The talk is that this strike could possibly start on October the 1st. And what the wisdom from the folks in the market think is that the strike would last for a couple of days, basically shutting down shipments at 14 ports on the East Coast as well as the Gulf Coast, and then the U.S. government would step in and put in place a cooling off period. I don't want to get too technical, but basically put the port workers back to work and reopen the ports, and then have the two sides continue to negotiate either during the cooling off period or after, toward an agreement that most likely, and here's where the politics comes in, again, would be worked out after the election. That's a big issue, because if the ports on the East Coast slow down, and keep in mind that 41% of the U.S. demand for recovered paper ends up being exported. Again, that would be quite an effect if those ports in the East are shut down. It would put pressure on the export market in terms of higher pricing, I would assume, because it would be harder to export tons. You wouldn't be exporting up the East Coast, and tons would all be forced to the West Coast. That's what is kind of expected, and then of course that would impact pricing up. The other likelihood is that the shippers have talked about a container surcharge that would kick in if the strike occurs on the 1st or the 2nd. And a container surcharge would also be pressure up on the pricing FAS at the ports, and of course on the water to the delivery point. The other issue that has come into play, also related to the demand scenario, is of course Europe, and the uncertainty, and this has affected China as well as the United States and the world, is the uncertainty over the economy in Europe and what's going to happen there. So that there's been a demand or lack of demand influence and impact that has occurred because of the uncertainty over the economy in Europe. Just some of the numbers, wanted to roll these quickly to further color the picture of what's going on in the marketplace today. January OCC to China, as it was September the 12th, a 22% decline. But the other odd factor that is now being involved, and it's also related, I believe, to some degree, if not fully, to the possibility of the strike on the 1st or 2nd of October, is that the Chinese, there's now been an increase in OCC shipments to China in the last 10 days or so, and with that has come increased price. So the FAS levels and the delivered levels have risen $10. So there's quite an interesting conflict. You've got the port issue, you've got the OCC price, which had been trending down. Now all of a sudden it's trending back up, and at the same time, U.S. mills on the board side who buy OCC, using OCC as the example and key grade here, are not increasing their demand or their pricing. So there's some real conflicting issues going on. To paint a little bit of the picture as it relates to exports to China, as you can see, the exports from February through May from the U.S. to China, 4.5 million metric tons, down from 4.85 in the period of September to December. So again, I'm just trying to reflect the drop-off in the Chinese demand, which was a factor, I think, a very important factor in the overall decline in pricing, both on the export market as well as on the domestic market, up through where we are today. As I've mentioned already, prices are basically half of what they were a year ago on OCC, and I've also included office paper there just as an example. This gives a even more specific look with the bulk grades mixed in number 8, and then also pulp sub envelope cuts in there, again showing the decline in the prices. And I've also estimated through year end, the estimate comes from talking with traders in the marketplace, folks who buy and who sell. And for example, what the market is generally saying, at least they said to me, was they expected possibly $10 more to fall out on OCC from the national average in September to December. Now, that said, though, please keep in mind that our discussion related to the port strike and the impact that could have on export prices, which would then likely have an impact on domestic prices. So all bets could be off, on that December number related to what occurs at the beginning of October with the port strike, if there is one, on the East Coast and the Gulf Coast ports. So mixed pretty much a hold. Number 8 looks like there's some more droppage there. OP a little bit down. Although OP is an interesting grade, even though some of the players thought the market pricing could come down a little bit in the next few months. There are 2 recycled content mills that will be starting up in the tissue sector. Both of them will count fully on recovered paper. One is ST paper in Franklin, Virginia. They've converted an old International Paper uncoated free sheet machine to tissue paper. They're supposed to be starting up next month, about a month from now. And then also Wausau Paper is starting up a new machine in Harrodsburg, Kentucky. And that will run on, as I understand it, the inked pulp. And of course, the inked pulp is made from primarily office paper. So if you've got capacity from those 2 machines starting up, Wausau by year end and ST potentially by the middle of next month, those would be 2 new demand factors that would affect the marketplace to some degree as it relates to the pricing level. So the outlook is, all eyes, of course, are on Europe. They're also, of course, on China, and of course, specifically related to recovered paper on what will happen in the first week of October and how that will affect supply and demand and exports, and then how that will come back and influence the U.S. marketplace. And of course, the mill closures have continued in the United States paper and board industry. Snowflake is shutting down or is already shut, I believe this week, or maybe they'll run another couple of weeks, but they'll stop their ordering this week. I'm not 100% on that. But anyway, as any of you who are suppliers in the marketplace, more important than ever to watch these days with those customers at the mills in terms of the closures. There continue to be a lot of dynamics going on in the kind of repositioning of the U.S. paper and board industry. Smaller mills that are being shut, and we've seen several examples of that this year. RMC acquired Official Board Markets, known as the Yellow Sheet OBM, a couple months ago. And I just wanted to talk a little bit about that as it relates to pricing. The OBM pricing on bulk grades will continue and will be integrated into Pulp and Paper Week. So the OBM as a publication will cease to exist in the next month, but its pricing for recovered paper and containerboard and boxboard will be run in Pulp and Paper Week. Specifically related to recovered paper, since that's the focus today, the bulk rate prices from the OBM and the same methodology will be used for pricing those materials run in PPW. So that's mixed paper, OCC, DLK. It also will include boxboard cuts and white blank news, and of course O&P number 8. The PPW prices that will be integrated into this one table that will start up in January of 2013 will be the high grades, the pulp subs, as well as coated groundwood sections and OMG. So this is the integration plan that we've worked out after talking with the marketplace over the last several months, and actually longer than that, to get a feel for what the market generally was looking for related to the integration of OBM and PPW. And most importantly, at least from my perspective, the integration goals, with recovered paper pricing, previously you had the OBM with one editor that did pricing, and you had PPW with one editor that did pricing of recovered paper. Now those two editors will work together, publishing the prices on the 5th of every month. And there's really going to be, as we see it, a checks and balances approach, meaning that 2 as 1 will be watching over the levels that is done by each of the editors. And of course, both the editors, myself, I'm one of the 2, 40 plus years of pricing collection in the U.S. recovered paper business, as well as for exports. So just finally to confirm, from October through December this year, the OBM and PPW prices for recovered paper, all the prices from both, will run together in Pulp and Paper Week. But starting in January of 2013, there will be one price table with the grades that I discussed before. And again, no change in the price collection methodology. So I'll take any questions that you might have, and I thank you very much for your time, and I wish all of you good luck with your business.
We're now going to field some questions from our presenters. Again, if you have a question, please enter them in the GoToWebinar dialog box on your screen. These questions are more than likely for Greg, so I'm going to start off. Do you think that the prices will begin to rise effectively after January?
Well, that's a tough one, because again, I think getting back to what happens in Europe is a key, and then also, how things play out in October related to China. So, my eyes are focused kind of in those 2 places, and then from that, I think will come the understanding of what's going to happen in the first quarter and the second quarter of next year. Right now, it's really hard to, and I'm not a forecaster per se. I do talk to a lot of people in the marketplace to get an understanding, but right now it's very difficult to say where it looks like the levels are going to be come January 2013 from where they are today, based on watching those 2 dynamics and how they unfold.
Okay, thank you. Next question is, will the demand for newsprint ever come back in the near future?
Well, my opinion is that is no, and I think that's the impression that is being given by the major newsprint producers in North America. And I'll just cite 2: SP, which has just been acquired by GE Capital out of bankruptcy, and then Resolute, which is the largest newsprint capacity player. And what has Resolute just done recently? Well, it acquired Fibrec, which has a high-quality NBSK mill in Quebec, and then also has 2 de-inked pulp mills in the United States. So what Resolute has done is they've increased their play in pulp, while they've tried to, and their CEO has said this, while they're trying to manage newsprint as it relates to where it's going to go, and will the incremental decline continue, and for how long. And then secondly, related to SP, I just cite them because their new CEO is Jay Garandiano, who is a Saint Laurent paperboard former CEO, whose focus comes from the containerboard corrugated side. And he has said, at least we ran a story Friday, very clearly he was saying he wants to see the 2 newsprint mills from SP, one in Dublin, Georgia, and the other in Newburgh, Oregon, make newsprint, of course, but also be able to, to go into the packaging side as well. So those are indicators to me that these folks are not seeing a return to growth in newsprint.
Okay.
In North America. In North America.
Okay, Greg. Next question is, are these permanent mill closures temporary or seasonal, or are they permanent? I guess that's a question. Are
Well,
they permanent
yeah,
or temporary?
I'll just cite the three recent ones. Mohawk closed a mill in Ohio. That was permanent. Appleton, closed the West Carrollton base paper mill for thermal. That is permanent. And then, of course, Catalyst with Snowflake is permanent. So, yeah, what we're seeing is two things. One is the permanent shuts that I just cited. And we're also seeing downtime. And I heard about a lot of downtime again, and have for the last couple of months, where mills are taking kind of one contact described it as scattered shuts, where a mill might they might have a machine down for maintenance for 4 days and it turns into 7 days and things like that. So again, with overall paper and board production in the United States down this year versus last year, and again it's just a slight reduction, there isn't a demand upside being seen by the mills if you look at the overall landscape of paper and board. So as a result, they're trying to monitor two things. One is their supply, and then two, most importantly, is their pricing for their end products. And so that's why we're seeing permanent shuts on the side where the demand shows little chance of coming back, which is on the graphic paper side. And then we're seeing downtime, at least I've been seeing that over the last few months as it relates to some of the other grades as well in the United States.
Next question is, if Chinese manufacturing is subject to domestic demand, and that from still shaky economies in the EU and the US and developing economies, how can they stimulate / jumpstart the global economy?
Was the question focused on the Chinese? I'm sorry?
Correct, yeah. If Chinese manufacturing is subject to domestic demand.
Well, I mean, you probably saw that, the leader, one of the leaders in China talked about, putting some more, putting money in the economy. So I mean, those are the kinds of things that will be a jump start. I think, when when there's stimulus money. The question is, really, when it all said and done, how sustained those kinds of stimulus packages can be. And then again, if you've got a region that is down, and I'm speaking of Europe as it relates to economics, the economies there, that can have an impact, of course, globally. So all the economies regionally need to be moving in a certain direction, and of course, China is an important indicator because so much is made there that is then sold around the world, whether it be shoes or toys or things like that. So.
Okay, we've got a metal question and possibly also a paper. If scrap metal represents 70% of the value of all scrap exports, then what materials are second, third, fourth, and fifth?
So that's the nonferrous, right, which was the largest component in terms of value. After that, I believe it's ferrous, scrap, then recovered paper. I think plastic comes after that, and then we've got a mixture of other commodities after that. But certainly non-ferrous, ferrous, recovered paper, and plastic are the biggest ones.
Okay. All right, I think that's it for our questions. Okay, again, thank you, Joe and Greg, for being our presenters today. As all our webinars, this one will be has been recorded and will be made available on the National Recycling Coalition and Recycling Market Center websites. Thank you again for joining us. We hope you will join us next month for our webinar scheduled Tuesday, October 16th at 1:30 Eastern Time. Have a good day.